Question 1. Understanding insurable interest. Which of the following statements best describes the concept of insurable interest in casualty insurance? The insurable interest refers to the requirement that the insured must derive some benefit from the existence of the insurance policy. B. Insurable interest mandates that the policyholder must have a financial stake in the insured property or person at the time the policy is issued and at the time of the loss. C. Insurable interest allows the insurer to avoid paying claims if the insured has a personal relationship with the insured property or person. D. Insurable interest ensures that all parties involved in the insurance contract are licensed insurance professionals. Answer B. Explanation. Insurable interest is a foundational principle in insurance that requires the policyholder to have a legitimate financial interest in the property or person covered by the insurance policy. This means that at the time the policy is issued and at the time of any loss, the policyholder must stand to suffer financial loss if the insured property is damaged or the insured person suffers harm. This principle prevents moral hazard and discourages insurance fraud. Option A is partially correct but does not encompass the requirement of having a financial stake at the time of loss, which is essential. Option C is incorrect because insurable interest does not allow insurers to refuse claims based solely on personal relationships. It is focused on financial stakes. Option D is misleading since insurable interest is about the relationship between the insured and the insured object, not the licensing of parties involved in the contract. Question 2. Policy limits and deductibles. In a casualty insurance policy, if an insured has a policy limit of $500,000 and a deductible of $10,000, how much will the insurer pay for a claim of $520,000? A. $510,000. B. $500,000. C. $520,000. D. $510,000 plus any additional fees. Answer B. Explanation. In casualty insurance, the insurer pays the covered loss amount minus the deductible. Here's the calculation for a claim of $520,000 with a $10,000 deductible. Amount paid by any equals claim amount. Deductible equals 520,000. 10,000 equals 510,000. However, since the policy limit is $500,000, the insurer will only pay up to that limit. Thus, the payout for this claim is capped at the policy limit, resulting in the insurer paying $500,000. Option is incorrect because it mistakenly calculates the payment without acknowledging the policy limit. Option C is incorrect because the insurer does not pay the full claim amount due to the deductible. Option D introduces an element that does not apply to this calculation. Question 3. Scenario-based ethical dilemma. Mr. Thompson is a claims adjuster handling a complex workers' compensation claim for an employee who was injured on the job. During the investigation, Mr. Thompson discovers that the employee had a pre-existing condition that contributed to the injury. He is under pressure from his supervisor to deny the claim based on this finding. What should Mr. Thompson do? A. Deny the claim immediately as the pre-existing condition is grounds for rejection. B. Investigate further to determine the extent to which the workplace contributed to the injury before making a decision. C. Accept his supervisor's directive without question as they have more experience in claims management. D. Recommend the employee seek legal advice before proceeding with the claim. Answer B. Explanation. In workers' compensation claims, the determination of compensability involves evaluating whether the injury arose out of and in the course of employment, regardless of pre-existing conditions. Mr. Thompson has an ethical obligation to conduct a thorough investigation to ascertain the role the workplace played in the injury as per the South Dakota codified laws concerning workers' compensation. Option A is incorrect because denying a claim solely based on a pre-existing condition without considering the work-related factors violates fair claims handling practices. Option C is ethically and legally questionable. Mr. Thompson must independently assess the claim regardless of pressure from his supervisor. Option D may be appropriate in certain situations, but it does not address Mr. Thompson's primary responsibility to assess the claim properly. Mr. Thompson should conduct a complete analysis of the claim as it reflects both legal obligations under South Dakota workers' compensation law and ethical standards in claims adjustment. Question 4. Risk management strategies. Which of the following risk management strategies best describes the practice of transferring risk to an insurance company? A. Risk retention. B. Risk reduction. C. Risk avoidance. D. Risk transfer. Answer D. Explanation. Risk transfer is the process of shifting the financial consequences of a risk to another party, usually through an insurance policy. This allows individuals or organizations to mitigate potential financial losses resulting from unforeseen events. Option A refers to risk retention, where an individual or business accepts the risk and decides to bear the costs of any loss. Option B is incorrect, as risk reduction involves implementing measures to lessen the severity or likelihood of a loss, not transferring it. Option C refers to risk avoidance, which involves eliminating the risk entirely, such as discontinuing a particular business activity. Understanding these strategies is essential for effective risk management in casualty insurance. Question 5. Exclusions in policies. Which of the following scenarios would most likely be excluded under a standard general liability insurance policy? A. Damage to rented property caused by the insured's negligence. B. Personal injury claims resulting from advertising practices. C. Bodily injury to an employee occurring during work hours. D. Slip and fall incidents occurring on the insured's premises. Answer. C. Explanation. Standard general liability insurance policies typically exclude coverage for bodily injury to employees while performing their job duties. This exclusion arises because such claims are covered under workers' compensation insurance, which is designed specifically for employee-related injuries. Option A is incorrect, because damage to rented property is generally covered unless specifically excluded in the policy. Option B is typically covered by general liability policies unless there are specific exclusions for advertising injury. Option D is covered under general liability insurance as it relates to the insured's premises and business operations. Understanding these exclusions helps policyholders identify gaps in coverage and ensure adequate protection against liabilities. Question 6. Claims process overview. During the claims process, which of the following actions is primarily the responsibility of the claims adjuster? A. Setting premiums for the policyholder. B. Reviewing claims for validity and determining the amount to be paid. C. Advising policyholders on selecting coverage options for new policies. D. Underwriting new insurance applications. Answer. B. Explanation. The primary responsibility of a claims adjuster is to review claims for validity, investigate the circumstances surrounding the claim, and determine the appropriate amount to be paid based on the policy terms and conditions. Option A is incorrect, because setting premiums is a function of the underwriting process, not claims adjustment. Option C is incorrect. While adjusters may provide information about claims, advising on policy selection is typically the role of an insurance agent or broker. Option D is also incorrect, as underwriting pertains to evaluating new insurance applications, a separate function from claims adjustment. The claims adjuster's role is critical in ensuring fair and accurate claims processing. Question 7. Indemnity principle. What does the principle of indemnity aim to achieve in the context of casualty insurance? A. To allow insured parties to profit from their insurance claims. B. To ensure that an insured party is restored to their financial position prior to the loss. C. To guarantee coverage for all types of losses regardless of their nature. D. To impose penalties on the insurer for denying claims. Answer. B. Explanation. The principle of indemnity is fundamental to insurance, ensuring that an insured party is compensated for a loss but does not profit from the insurance payout. The aim is to restore the insured to the financial condition they were in immediately before the loss occurred, thus preventing overcompensation. Option A is incorrect, because the purpose of indemnity is not to allow profit but to prevent financial gain from losses. Option C is misleading. Indemnity does not guarantee coverage for all losses, as certain exclusions may apply. Option D is not relevant to the principle of indemnity, which focuses on compensation rather than penalties. This principle is crucial for maintaining fairness and preventing moral hazard in insurance. Question 8. Professional liability insurance. Which of the following best describes the coverage provided by professional liability insurance? A. Coverage for property damage claims arising from business operations. B. Protection against claims of negligence or inadequate performance in a professional service. C. Insurance for general liability risks, such as slip and fall accidents. D. Coverage for automobile accidents involving business vehicles. Answer. B. Explanation. Professional liability insurance, also known as errors and omissions insurance, protects professionals against claims of negligence, mistakes, or inadequate performance in the services they provide. This coverage is essential for professionals such as doctors, lawyers, and consultants. Option is incorrect, as property damage claims are covered under general liability insurance, not professional liability. Option C is also incorrect because general liability covers public liability risks rather than professional conduct. Option D refers to commercial auto insurance, which covers business-related vehicle accidents, not professional liability. Understanding the scope of professional liability insurance helps professionals manage their risks effectively. Question 9. Rate approval process. Which of the following statements accurately reflects the rate approval process for insurance policies in South Dakota? A. Insurers can implement any rate they choose without prior approval from the state. B. Rates must be filed with and approved by the South Dakota Division of Insurance before use. C. Insurers only need to notify the state after implementing a new rate. D. Rate approvals are based solely on the insurer's financial status. Answer B. Explanation. In South Dakota, insurance rates must be filed with and approved by the South Dakota Division of Insurance before they can be implemented. This ensures that rates are adequate, not discriminatory, and not excessively burdensome to consumers. Option is incorrect as insurers cannot arbitrarily set rates without approval. Option C is misleading and prior approval is required rather than mere notification after implementation. Option D is also incorrect. While financial stability may play a role, the approval process focuses on the appropriateness and fairness of the rates. This regulatory framework helps maintain fair practices within the insurance market. Question 10. Understanding exclusions. In the context of a commercial property insurance policy, which of the following is typically excluded from coverage? A. Losses due to employee dishonesty. B. Damage from fire or lightning. C. Theft of property while in transit. D. Damage caused by natural disasters such as floods or earthquakes. Answer D. Explanation. Commercial property insurance policies often exclude coverage for certain natural disasters such as floods and earthquakes. Instead, businesses may need to purchase separate policies or endorsements to cover these specific risks. Option A is incorrect because employee dishonesty can often be covered under fidelity bonds or specific endorsements within commercial policies. Option B is incorrect as fire and lightning are typically covered perils under most commercial property insurance. Option C is incorrect. A theft of property in transit is generally covered unless specifically excluded in the policy terms. Understanding these exclusions is vital for businesses to ensure comprehensive coverage and mitigate potential risks. Question 11. Bodily injury liability coverage. Which of the following statements best describes the purpose of bodily injury liability coverage in an automobile insurance policy? A. To cover medical expenses for injuries sustained by the insured driver. B. To provide compensation for injuries to third parties in an accident caused by the insured. C. To pay for repairs to the insured's vehicle after an accident. D. To cover lost wages for the insured due to an accident. Answer B. Explanation. Bodily injury liability coverage is designed to protect the insured from financial loss if they are found legally responsible for causing injury to others in an automobile accident. This coverage typically pays for the medical expenses, lost wages, and pain and suffering of the injured parties. Option A is incorrect because medical payments coverage, not bodily injury liability, pays for the insured's medical expenses. Option C refers to collision coverage, which covers repairs to the insured's vehicle, not liability for injuries to others. Option D is incorrect as lost wages for the insured are not covered under bodily injury liability. These would be covered under the insured's personal injury protection (PIP) if available. Understanding bodily injury liability is essential for comprehending the broader implications of automobile insurance. Question 12. Uninsured motorist coverage. What is the primary function of uninsured motorist coverage in an automobile insurance policy? A. To provide coverage for damages to the insured's vehicle after an accident. B. To cover medical expenses and lost wages for the insured if injured by an uninsured driver. C. To pay for damages to third parties caused by the insured driver. D. To cover legal fees incurred while pursuing claims against an uninsured driver. Answer B. Explanation. Uninsured motorist coverage is designed to protect the insured against financial loss when they are involved in an accident with a driver who does not have insurance. This coverage pays for medical expenses, lost wages, and other damages suffered by the insured due to the accident. Option A is incorrect because that function is served by collision coverage. Option C describes bodily injury liability coverage, which is not related to uninsured motorists. Option D is incorrect. While legal fees may be incurred, coverage primarily focuses on compensating the insured for their losses rather than covering legal expenses. Grasping the purpose of coverage is vital for understanding personal automobile insurance protections. Question 13. Policy limits. Which of the following describes how aggregate limits work in liability insurance policies? A. They apply to each individual claim within a policy period. B. They limit the total amount an insurer will pay for all claims during a specified policy period. C. They set a maximum payout for bodily injury claims only. D. They apply only to property damage claims made against the insured. Answer. B. Explanation. Aggregate limits in liability insurance policies represent the maximum amount the insurer will pay for all claims during a specified policy period. Once this limit is reached, no further claims will be paid until the policy is renewed. Option A is incorrect. Individual claim limits pertain to per occurrence limits, not aggregate limits. Option C is misleading. Aggregate limits encompass all types of claims, not just bodily injury. Option D is incorrect, as aggregate limits apply to all claims, including both bodily injury and property damage. Understanding policy limits is crucial for evaluating the adequacy of coverage in liability insurance. Question 14. Workers' compensation insurance. Which of the following statements accurately reflects the purpose of workers' compensation insurance? A. It provides coverage for employees' medical expenses related to workplace injuries without regard to fault. B. It allows employers to deny claims if the employee was negligent. C. It compensates employees for lost wages only if they are not at fault for the injury. D. It covers employees' health insurance needs resulting from workplace injuries. Answer A. Explanation. Workers' compensation insurance is designed to provide medical benefits and wage replacement to employees injured in the course of their employment, regardless of fault. This system protects both employees and employers, as it limits employees' rights to sue their employers for negligence in exchange for guaranteed benefits. Option B is incorrect, if fault is not a consideration in workers' compensation claims. Option C is misleading, as workers' compensation benefits are available regardless of the employee's fault. Option D is incorrect. While workers' compensation covers medical expenses, it does not serve as health insurance. Understanding the fundamentals of workers' compensation is essential for managing employer-employee relationships and liabilities. Question 15. Subrogation. What is the principle of subrogation in casualty insurance? A. It allows an insured to recover their deductible from the insurer. B. It enables the insurer to seek reimbursement from a third party responsible for a loss after paying the insured. C. It ensures that claims are paid without any investigation into the cause of loss. D. It restricts the insured's ability to sue the insurer for underpaid claims. Answer. B. Explanation. Subrogation is a principle in insurance where, after compensating the insured for a loss, the insurer has the right to pursue recovery from a third party that caused the loss. This helps insurance companies recoup their payouts and maintain low premium costs for insured parties. Option A is incorrect. Deductibles are typically the insured's responsibility, not a recovery method through subrogation. Option C is misleading. Investigations are generally conducted to determine liability before payment is made. Option D is incorrect, as subrogation does not restrict the insured's ability to pursue legal action against the insurer. Understanding subrogation is essential for navigating the claims process and understanding the rights of both insurers and insureds. Question 16. Claims adjustment process. In the claims adjustment process, which of the following actions is typically performed during the investigation phase? A. Setting the claim amount to be paid to the insured. B. Interviewing witnesses and gathering evidence related to the loss. C. Reviewing the policy for coverage limits. D. Negotiating a settlement with the insured. Answer. B. Explanation. During the investigation phase of claims adjustment, adjusters focus on interviewing witnesses, collecting evidence, and determining the facts surrounding the loss. This phase is critical for establishing the validity of the claim and the amount that may be due. Option is incorrect, as determining the claim amount occurs later, after the investigation is complete. Option C is a necessary step but typically follows the investigation phase. Option D involves finalizing a claim, which comes after the investigation has been completed and the claim has been validated. Grasping the claims adjustment process helps ensure fair treatment for all parties involved in an insurance claim. Question 17. General liability insurance. Which of the following types of incidents is typically covered under a general liability insurance policy? A. Professional errors made by a licensed architect. B. Slip and fall accidents on the insured's premises. C. Damage to a client's property caused during the course of work. D. Breach of contract claims made against the insured. Answer. B. Explanation. General liability insurance provides coverage for bodily injury and property damage occurring on the insured's premises or due to their operations. This includes slip and fall accidents, which are common liability claims. Option A is incorrect, as professional liability insurance covers professional errors, not general liability. Option C may fall under a specific type of liability insurance, such as property damage liability, but it's not typically covered under general liability. Option D is incorrect, because breach of contract claims usually fall outside the scope of general liability coverage and are better addressed through specific business insurance policies. Understanding the scope of general liability insurance is essential for businesses to effectively manage their risks. Question 18. Risk retention groups. What distinguishes risk retention groups from traditional insurance companies? A. ROGs can only insure government entities. B. ROGs allow members to pool their risks and provide coverage for their own liabilities. C. ROGs are regulated by federal insurance laws only. D. ROGs can offer health insurance products exclusively. Answer. B. Explanation. Risk retention groups are a type of insurance company that allows members with similar risks to pool their resources and provide coverage for their own liabilities. This model enables members to share the financial burden of losses, often leading to low premiums and tailored coverage options. Option A is incorrect. RGS can insure a variety of members, including businesses and professional associations. Option C is misleading. While RGS are subject to some federal regulations, they are also regulated by the states in which they operate. Option D is incorrect, as RGS primarily focus on liability coverage, not health insurance products. Recognizing the unique structure of RGS aids in understanding alternative insurance options available to businesses. Question 19. Privacy regulations. Which of the following acts primarily governs the privacy and confidentiality of consumer information in the insurance industry? A. The Fair Credit Reporting Act of CRA. B. The Gramm-Leach-Bliley Act (GLBA). C. The National Insurance Act. D. The Affordable Care Act (ACA). Answer. B. Explanation. The Gramm-Leach-Bliley Act (GBA) establishes requirements for financial institutions, including insurance companies, regarding the protection of consumer information. This law mandates that these institutions disclose their privacy policies and practices to consumers, and gives consumers the right to opt out of having their personal information shared with non-affiliated third parties. Option is incorrect. While the Fair Credit Reporting Act (FCRA) regulates consumer reporting agencies and the use of credit information, it does not specifically address privacy for insurance companies. Option C is incorrect. The National Insurance Act does not pertain to privacy regulations in the insurance sector. Option D is incorrect. The Affordable Care Act (ACA) primarily deals with health insurance reforms and does not focus on privacy regulations for the insurance industry. Understanding the GLBA is critical for insurance professionals to ensure compliance with privacy laws and to protect consumer information. Question 20. Insurance fraud. What is the primary purpose of the Fraud Enforcement and Recovery Act? A. To establish stricter penalties for insurance fraud. B. To fund federal investigations and prosecutions of insurance fraud. C. To prevent fraud in the health insurance sector only. D. To create a national database for reporting insurance fraud cases. Answer. B. Explanation. The Fraud Enforcement and Recovery Act primarily aims to enhance the government's ability to investigate and prosecute various types of fraud, including insurance fraud. It provides funding to federal agencies to investigate cases of fraud and to facilitate recovery efforts related to fraudulently obtained funds. Option is partially correct, but the Act focuses more broadly on funding and investigative support rather than just increasing penalties. Option C is incorrect. The Act covers a range of fraud types, not limited to health insurance. Option D is misleading. While the Act strengthens fraud enforcement, it does not specifically create a national database for insurance fraud. Understanding the implications of the Fraud Enforcement and Recovery Act is important for insurance professionals in recognizing the serious legal repercussions of fraudulent activities. Question 21. General liability insurance. Which of the following coverages is typically included in a commercial general liability CGL policy? A. Coverage for employee injuries on the job. B. Coverage for damages arising from the use of vehicles. C. Coverage for advertising injury. D. Coverage for property damage caused by natural disasters. Answer. C. Explanation. A commercial general liability (CGL) policy includes coverage for various types of liabilities, including advertising injury, which covers damages arising from certain advertising activities such as copyright infringement and slander. Option A is incorrect. Employee injuries are generally covered under workers' compensation insurance, not a CGL policy. Option B is incorrect. Vehicle-related damages are typically covered under a commercial auto insurance policy. Option D is misleading, and while CGL may cover property damage, it typically does not cover damages caused by natural disasters unless specifically endorsed. Understanding the nuances of CGL policies is essential for determining appropriate coverage for businesses. Question 22. Workers' compensation. In South Dakota, which of the following is true regarding workers' compensation insurance? A. It is optional for all employers regardless of the number of employees. B. Employers can choose their own insurance carriers without state oversight. C. Employers are required to provide coverage for all employees, including part-time workers. D. Employees can sue their employer for workplace injuries if they receive workers' compensation benefits. Answer. C. Explanation. In South Dakota, employers are required to provide workers' compensation insurance for all employees, including part-time workers. This insurance provides medical benefits and wage replacement for employees injured on the job regardless of fault. Option is incorrect. While some smaller employers may have exemptions, most are required to carry coverage. Option B is misleading. Although employers have options for carriers, they must comply with state regulations and standards. Option D is incorrect. Accepting workers' compensation benefits generally precludes employees from suing their employers for workplace injuries. Understanding workers' compensation laws is crucial for employers to ensure compliance and protect both their employees and their businesses. Question 23. Risk management. Which of the following is a primary objective of risk management in the insurance industry? A. To completely eliminate all risks associated with a business operation. B. To increase the cost of insurance premiums. C. To identify, assess, and prioritize risks. D. To reduce compliance with regulatory requirements. Answer. C. Explanation. The primary objective of risk management in the insurance industry is to identify, assess, and prioritize risks to minimize potential losses. Effective risk management helps organizations make informed decisions about insurance coverage and risk mitigation strategies. Option is incorrect. It is often impossible to eliminate all risks, so rather, the goal is to manage them effectively. Option B is misleading. While risk management can influence premiums, its primary goal is not to increase costs. Option D is incorrect. Risk management should enhance compliance with regulatory requirements, not reduce it. Grasping the principles of risk management is vital for insurance professionals in developing sound policies and strategies. Question 24. Indemnity principles. In casualty insurance, the principle of indemnity is best described as A. Providing a profit to the insured after loss. B. Ensuring the insured is restored to their financial position before the loss. C. Allowing insured individuals to recover more than their actual loss. D. Offering coverage that exceeds the policy limits. Answer. B. Explanation. The principle of indemnity in casualty insurance ensures that the insured is restored to their financial position before the loss occurred without profiting from the insurance coverage. This principle prevents overcompensation and promotes fairness. Option is incorrect. Indemnity aims to avoid profit from a loss. Option C is misleading. Indemnity prohibits recovery that exceeds the actual loss. Option D is incorrect. Policies are designed to have limits that cannot be exceeded. Understanding indemnity is essential for ensuring fair treatment of policyholders and maintaining the integrity of the insurance system. Question 25. Underwriting principles. Which of the following factors is typically not considered in the underwriting process for casualty insurance? A. The applicant's credit score. B. The type of business and its operations. C. The applicant's previous claims history. D. The applicant's political affiliation. Answer. D. Explanation. Underwriters assess various factors when evaluating applications for casualty insurance, including the applicant's credit score, type of business, and previous claims history. However, an applicant's political affiliation is generally not considered relevant in the underwriting process. Option is incorrect. Credit scores are often used to gauge financial responsibility. Option B is incorrect. Understanding the type of business is critical for assessing risk. Option C is incorrect. A claims history is a significant indicator of future risk. Knowledge of underwriting principles is crucial for accurately evaluating risks and determining appropriate premiums. Question 26. Claims management. What is the first step in the claims management process? A. Assessing the claim's validity. B. Notifying the insurer of the loss. C. Investigating the claim. D. Settling the claim with the insurer. Answer: B. Explanation. The first step in the claims management process is notifying the insurer of the loss. This initiates the claims process and allows the insurer to begin investigating the circumstances surrounding the claim. Option is incorrect. A validity assessment occurs after notification. Option C is misleading. Investigation follows notification and initial assessment. Option D is incorrect. A settlement occurs later in the process after determining the claim's validity and investigating it. Understanding the claims management process is vital for effective communication and timely resolution of claims. Question 27. Policy limits. Which of the following best describes an aggregate limit in a casualty insurance policy? A. The maximum amount payable for a single incident. B. The total amount payable for all claims during a policy period. C. The minimum coverage amount required by law. D. The amount retained by the insured in a deductible. Answer: B. Explanation. An aggregate limit in a casualty insurance policy refers to the total amount payable for all claims during a specified policy period, usually a year. This limit helps insurers manage their exposure to large losses over time. Option A is incorrect. A per occurrence limit defines the maximum for individual claims. Option C is misleading. A minimum coverage is typically mandated by law but is not related to aggregate limits. Option D is incorrect. Deductibles are separate from the limit structure of a policy. Grasping policy limits is essential for understanding coverage and potential financial exposures. Question 20. Financial aspects of insurance. In the context of insurance company financial statements, what is the primary purpose of reserves? A. To fund marketing initiatives. B. To pay dividends to shareholders. C. To cover future claims and obligations. D. To increase the company's market share. Answer: C. Explanation. Reserves are funds set aside by insurance companies to cover future claims and obligations. Properly managing reserves is crucial for ensuring the financial stability of the company and its ability to meet its claims obligations. Option is incorrect. Reserves are not used for marketing but for covering liabilities. Option B is misleading. While reserves impact overall financial health, they are not specifically designated for dividends. Option D is incorrect. Market share is influenced by various factors, but reserves are not directly related to the objective. Understanding the role of reserves is critical for assessing the financial health of an insurance organization. Question 29. Ethical dilemmas in insurance. An insurance adjuster discovers that a claimant has exaggerated their injuries to receive a higher settlement. What is the most ethical course of action for the adjuster? A. Ignore the exaggeration and recommend full settlement. B. Confront the claimant directly about the exaggeration. C. Report the findings to the insurance company for further investigation. D. Offer to settle for a lower amount to avoid conflict. Answer: C. Explanation. The most ethical course of action for the insurance adjuster is to report the findings to the insurance company for further investigation. This ensures that the claim is handled fairly and transparently, adhering to ethical standards and regulations. Option is incorrect. Ignoring the exaggeration compromises ethical standards. Option B is misleading. Confronting the claimant directly could lead to unnecessary conflict and is not within the adjuster's purview. Option D is incorrect. Settling for a lower amount does not address the underlying issue of exaggeration and may be seen as unethical. Navigating ethical dilemmas is vital for maintaining integrity within the insurance industry. Question 30. Consumer protections. Which of the following consumer protections is designed to ensure fair claims handling practices in the insurance industry? A. The Federal Insurance Office, FIO. B. The National Association of Insurance Commissioners, NAIC. C. The Fair Claims Settlement Practices Model Act. D. The Health Insurance Portability and Accountability Act, HIPAA. Answer: C. Explanation. The Fair Claims Settlement Practices Model Act is designed to ensure fair and prompt claims handling by insurers, outlining standards for claims investigation, settlement, and communication with claimants.